Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, August 9th, 2024. It's 1:04 p.m. Eastern Time, so about a midday update. Might be the only one I get out to you today, and kind of keeping things light right now. But what I'll do is a brief overview on the stock market, including the VIX. Time permitting, I'll get to some of the other stuff like the metals and commodities, natural gas, and all that. But let's. I want to just keep this one relatively short and kind of big picture it here. All right. So as far as the big picture, we're starting out here on the monthly time frame. That means every candlestick is 1 month. You can go back as long as you want here to when QQQ first came to market, when ETFs started becoming a thing back in the late 80s. QQQ was one of the earlier ones. And so what you see, I'm going to zoom in a little tighter. We don't need to go back that far right now. We can see back, for those of you that have been doing this a little while, back in 07 to early 09, we had the last kind of what I call true bear market, where it started out and it was, it ended with unnatural forces with the Fed. That was when the Fed began their zero interest rate policy and quantitative easing, flooding the system with money and all that. But other than that, it played out in a typical fashion of a bear market. It was a 55%, give or take, drop, a little bit better than that in both the S&P and the NASDAQ. And really, again, what I kind of consider the last, true bear market. COVID, my thoughts, I call it Ursa interruptus, bear market interrupted with, excessive intervention by the Federal Reserve, as well as Washington and all the global central banks around the world and government, fiscal and monetary stimulus. Anywho, so this is, and I'm bringing that up because that's our bull market uptrend line from the 09 lows right there. Technically, I know QQQ bottomed in November of 08, but every other index, the S&P 500, the Wilshire, small caps, mid caps, in most stocks bottomed back in March of 2009. So that's a trend line at bare minimum. That's a trend line I think we're going to come in and check sometime soon, just like we came in and checked the 200s, what I've been calling for. And when you're in a bull market, nothing goes up forever. You get far enough away from it, and you're going to come back and check those uptrend lines. So that's kind of big picture stuff. But on that, and again, it's these big, unusual on the monthly time frame bearish divergences that indicate we'll probably take that out. That's to say that secular bull market uptrend line is long in the tooth would be a gross understatement. So, all things must come to an end, and ultimately, and then within the next year or two, I think that trend line goes, and we're looking at much deeper targets. And you guys already have those. I've shared those quite a bit on the weekly time frame. But let's just talk about right now on the monthly. Remember, monthly chart, all that matters is how the candlesticks close. So you have this near-term uptrend line off the 2022 lows, October 2022 lows. We pierced it intra-month. We're practically trading, a hair below it right now, but it doesn't matter because today is August 9th. Only thing that matters is how we close the month. So this will be determined if and when that level, the trend line goes, that minor trend line there. We'll be watching this 20-month exponential moving average that does a great job of defining bull markets when you're above it. By pullbacks to it, keeps the bull trend going. When you break it, you're in a bear market. That by just about every metric was still a bear market. It wasn't one of the true bear markets. And again, I have a lot of metrics that show me it was just kind of the initial leg down from a bigger one that's coming. All right, let's go to the weekly chart. And busy here, but I'll zoom in for you real quick. It makes it a little bit clearer. I've shared this chart quite a bit lately. It comes back that from the end of 2022, you have this primary uptrend line in yellow right here. That's our key uptrend line. I can tweak it too. I can put it right here as well, and it comes in on the bottom of that candle. And either way, we are back testing, and that's actually the better fit. I'm going to pull that down. Why did I do that? I should have had it on that bottom of that candle there. Here. It comes a little bit north of that one. Again, you can play around with it, but we're at price resistance here. Remember, these were the targets I laid out right here in late June. And T1 was hit, T2 was hit intra-week. This is, again, we're looking at a weekly candle, so lots happened this week. But at the end of the day, and this is why I'm doing this video, we're going to close the week, barring any kind of explosion into the close, which I don't anticipate. There's only 3 hours to go. we're going to close back on right on resistance. That resistance we've been testing for the last 3 days. So you can look at it this way: breakdown and simply a back test. We're going to close on or below that trend line. And again, the price resistance at T1 about we'll call it 450 on QQQ. And remember, this was, we reversed and covered there because this was just a brief undercut and successful defense of the 200 days. Just so to summarize it, we're kind of pinched between resistance, back testing them from above, or from below. We're below the resistance, back testing it right now from below, but we broke down below it. And we're also above those key 200 moving day moving averages, which again, you can't, you have to fully respect. As you can see here, as I've covered many times, that's where they, in a bull trend, they step in and buy it. They, meaning everybody, the institutions, individual investors. And you got to, allow for sometimes intra-week pierces or slight closes above or below. But once it clearly gets taken out like that, and then you back test, those are your short ops. So again, I've covered that a lot of times. So that's where we're at, guys. We're kind of pinched, if you will, between a rock and a hard place, or support and resistance when it comes to that. I'm going to drill down, keep drilling down, go to the weekly or the daily now. And that's how I had the trend line drawn there. Same trend line that I just showed you on the weekly, comes in perfectly, captures all these reaction lows. And so again, just like on the weekly, we're back testing. These are the same targets on the weekly as the daily here. 200-day moving averages hit. So that's it. I'll get to my thoughts here in a second on where we go. And we're going to keep drilling down shorter term. Now we're on a 60-minute chart. Gave you, which I still maintain, a potential, what I call likely bounce target zone, whatever you want to label it as. But that's where I think I could easily see the bounce going to. And we're at the bottom of it now, where I closed that long trade out, off Monday's lows. Close that trade out there. Just simply stating that we could go higher, but the RR was not favorable. In other words, I view it as being long here, staying long, or going long is like picking up nickels in front of a steamroller. If my primary scenario is correct, that we're this could happen starting today before the close, the next leg down, or maybe we have a little upside next week. A little hurrah into the close. I don't know. All I can tell you is the very near term is uncertain. That's why I've kind of cut back a little bit on the updates and the posting. Remember, they're going to, and they have, like I said they would, they get giddy when the 200s are tested. Everybody that wanted to own NVIDIA and Apple and Microsoft for a year now, that just didn't have that opportunity, they felt, to buy it. Well, again, if you're a bull on this economy and the stock market and big tech, when do you buy if you didn't just buy this drop? So they're going to buy, and they are buying. They have bought, right? So let's just, that's pretty simple stuff. The $1 million question is it over? Was it a great buying op for the road to new highs, or is it just that reflexive bounce that I think it is? Right now, that's enough evidence that I have that that's all it is, and it could carry a little more or not. Again, I shared my thoughts. And as far as my trading plan, like I said, I started scaling back into swing shorts there. But we're right where we are. We didn't go low enough to add. We need to take out the recent lows. We need to move back below the 200s to open the door to the next downside targets. So we're right where we were. It wouldn't make sense to add. I'm adding at the same price point. So I either want to scale in up to where I get better prices on my shorts, on those swing shorts, or if we start reversing and I'm comfortable that we've run its course and we're going to go down lower. So kind of sitting tight for now on swing short positions, and I'll get to the short-term chart. Well, we'll work our way down. Let's do that. 5-minute chart, that wasn't what we had in pre-market. There's 5-minute divergences still building, 15-minute divergences. This seems to be, this active trading time frame here. This is a 15-minute chart. It's a little, the futures just paint a bit better picture, in my opinion. So this is NQ, NASDAQ 100 futures, 5-minute chart. Oh, no, I'm sorry, 15-minute chart. And what you have here is this divergence building, as I'm drawing it out here. Well, no, it's to this point right now. That's our most recent high, but that is negative divergence. We started to move off that, and we have this trend line. I believe I pointed that uptrend line out the other day as a pullback target, and we hit it. And so we can wedge higher here into the close today. I'm guessing that if we do ramp up higher and put in that marginal new high, which I'm kind of leaning towards, it almost looks like they're going to do it, Probably see a dump into the close, and I'll get to that in a second when I get to the VIX. And then next week, again, you're just gambling if you go home heavy long or heavy short over a weekend right now, because as what I just told you, we're between support and resistance. They're still buying the 200s. The near-term trend has been kind of grinding a little higher, mostly sideways, but we're a little bit above, as you can see that, that recent trading range here that I had boxed in, not by much. So that's it, guys. There's kind of like a near-term upward bias, but also plenty of resistance. And I think plenty of nervous longs, which may want to exit this rally before the close today would be my guess. So the higher we go up until the last hour of trading or so, the higher will probably fall. It's hard to say because it's, at any point in time, there's either more scared shorts that want to close out are getting squeezed out right now, and they may go up because we know they piled in recently. I call them the JCL, Johnny Come Lately shorts. But there's got to be a lot of nervous longs. We just had one of the biggest ass whoopings the market's been handed in a long time. So let's talk about that a little bit. Let's go back to QQQ. Let's turn off all the annotate, all the lines, and just talk about this drop we've had here. That was as you can see, the pop-up box to the left, 25 days, that's 25 calendar days or 17 trading sessions, dropped 16%. When you look at a weekly chart, you can see that it's an unusual hard down for that short a period of time. We haven't seen anything like that since back here, the last time we were in that 2022, late 2021 to late 2022, bear trend, whatever you want to call it. Now, and the $1 million question everybody wants to know, is it over? My thoughts, I don't think it's over. As far as, bigger picture, like I said, it's a little upside. But let's talk about the VIX real quick. And the VIX is what you all know. It's called the VIX Volatility Index. It's also AKA known as the Fear Index, right? Because it is derived from put and call buying, and all of a sudden there's a tremendous amount of put buying. VIX is going to spike because there's fear in the market. And just rolling back here. This is a long-term weekly chart, one I've covered many times with you before. This is back in the day. VIX has different high and low ranges. Back in the late 90s and early aughts, this was where bear markets would end. And then we kind of entered a new era of low volatility. That was the 2009 or 07 to 09 bear market, ended right there. As I often mention, remember the VIX is based on the S&P 500 options. And as I told you, the S&P 500 peaked in March of 09. But as I've often told you, and these are takeaways I've learned over the years, so hopefully these are the kind of, however you want to apply it to your trading and investing. But it's been my experience the VIX will almost always peak first. So if you're bearish and you're shorting and you're long the VIX, because you get that juice, it's hard, man. When I have high confidence on a drop, I'm going to short the indexes, whichever one, typically the NASDAQ, sometimes the small caps, that I think is going to drop the most, and I'm going to go long the VIX. But I'm also going to, as I've shared with you before, and even recently, cover my VIX longs, sell them, a little bit before my short targets hit the indexes hit their downside targets, because it's been my experience. And that's also a tell, by the way, for you when you're coming down to those targets on the index shorts. If you see all of a sudden before that the VIX has peaked out and it's coming down while the stock market's still falling, it just, again, it's a takeaway. Again, something I've learned over the years. I've never heard anybody repeat it. Maybe others have figured it out. So just kind of a heads up there. And so you can see here that's when the VIX peaked back in late 08. And remember, the stock market had that final big thrust down from late in that November bear market rally, November of 08 to the March 09 lows. But yet the VIX was already falling. So if you waited, if somehow you knew at the moment on March 6, 2009 that the bear market was over, you already melted down your VIX. If you stayed long the VIX, you missed most of your gains were given back at that point. So that's just kind of an FYI. And we saw it here recently too with the market. So what else do you see on this chart? What I covered, this is where bear markets in modern history have ended right here. The two, COVID and the 08, 09, 07, 09 bear market. And this is where all the big corrections have ended at this line here. And as I mentioned many times before, in 2020, October 2022, when the markets peaked, we didn't even come close. So there was we didn't have the fear at that point in time. This time we spiked and hit it. So if you're a glass half full guy or gal, you can say, well, Randy, this drop we just had was that was it. We hit that 2009 to, we can say maybe that's to be continued bull market correction, and so the correction's over. From the looks of the VIX, especially when we go down to the daily chart, and from the look of the stock market as well, this is the daily, guys. I just zoomed down to the daily now. We're on a weekly. Doesn't look like it. This kind of spike is usually, it's hard to see here. You got to really dig back, but that's usually the initial shot across the bow kind of spike you get in the VIX. I'm trying to zoom in for you. Having a real hard time with it right now. Why won't it grab this line here? 1 second. Oh, there it is. It was pushed down. I had to squeeze, pick up this chart a little bit down here on the bottom. So let me zoom back to that little spike we had there. That was COVID hit. And you can see there was the, if you look closer, here, I'll roll it in a little tighter. Little initial shot across the bow. Big surge up to about where we're at right now. It's about $50 level. Had a pretty hefty pullback, and then boom, wave 2 came. So it's very similar. You can see here we stopped around the $50 level, pull back there. So history doesn't always repeat, but it often rhymes. The only way you get these kind of next big legs down is to let the masses think that it's over and it's safe to get back in the water. So kind of the more we rally today, or maybe even into next week or two, the more they'll parade out the permabulls on the CNBC and Bloomberg and tell everyone why this is one of the best buying ops in years, and you need to load up on Apple, Nvidia, VIX, and everything with AI in it. So we'll see. That's just kind of my thoughts. So it's analysis of the stock market, also based on the VIX. My put to call ratios haven't hit extremes, so there's a lot of metrics that say it could be over based on that big spike, but probably not over. Remember, I speak in probabilities, not possibilities, and so it's certainly possible it's over based on that and the fact we just pulled back to the 200s and everything else. But based on my read on the charts, I don't think it is. So again, whether we bounce today a little more, next week, or for maybe a few more weeks, like I said, we start taking back. When will my view change? Well, that's a good question. If we take back this primary uptrend line, that's going to be a biggie right there. The uptrend line off the roughly January, late December, January lows on QQQ, the S&P 500. Remember, in these weekly charts, I put a lot of weighting into. So we have these solid sell signals on the weeklies. This is SPY, the S&P 500. Gave us a breakdown there of that uptrend line. We're well below it now. Perfect, almost a perfect kiss to the 200-day moving averages. So we start taking back the trend lines. Yeah, you're going to be challenging the highs, and you get near those highs again, you'll just have a lot of shorts covered. So that's it, guys. So what I said the other day is, what was it, 2 days ago, Wednesday? I think it's time, for me, is to, what I've already done, is add back some short exposure. And I'll pick it up Monday. I want to say I hope it won't be a hammer down, gap down, big, huge thing on Monday. If it is, I've got some short positions, starter shorts that I've started taking back that'll profit. But I'd rather not see it so big that I don't feel like adding to those. We'll see what happens. And, there's stuff going on in the Middle East and all that, but you can't, I've said this before, you cannot trade off the headlines. You can't trade off the craziness with the presidential elections, Iran, what's going on there. You just have to trade off the charts. And so, and trading, just like investing, is about risk management. So we're heading into a weekend. I give you my clear thoughts that I think this bounce has either run its course from where we are now, which is the same place where we were Wednesday, up to maybe a little bit more based on, you've got my targets on the, where to go, daily chart. Remember, this is that same downtrend line I gave you on the 60, right there. And that's my bounce target zone. It's not much. And that's, again, it's about RR, risk reward, so to short here, even if you wanted to hard short. It's not my thing right now. But you're only talking another, 2, maybe 3% to backtest the intersecting uptrend line and that downtrend line there. That's 3% from where we are. And so if you're looking at, the bigger picture, keeping your eye on the prize, you might get a 3%, again, assuming you don't go any higher, you wanted to put your stop somewhere above there. So you got 3% downside to make, if that next target's 43%. That's a extremely good RR. And again, VIX futures are a more pure play, if you will, in trading the VIX. But I know a lot of you don't trade futures, don't understand them. And I get that, and don't try to do what you got to read up on them. Even VIX futures are different from the index futures, the roll dates, expiration, all that stuff. And remember, you got to be Johnny on the spot. You got to be in at the right time, which we were right here, and you got to be out. I officially closed it out there, give you 2 additional targets. The next one, T5, was hit that following day, reaction off there, and I gave you potential pullback zones, anywhere from really where we were right here down to, and that meshes with that max upside potential to the downtrend line in QQQ in the back test of the primary trend line. So that's kind of the range. Would it be objective if we got there? Certainly, especially, but you have to only go long the VIX when I can make a case to short the market. Because again, if you're just a little early on the VIX or a little late getting out, you miss it. Really affects the results. So if you don't know what you're doing, and you're not nimble and don't have time to devote full time, especially when the market's very volatile and moving, a lot of the turns are coming intraday. During corrections, bear markets, I'm going to get posts out to you as soon as I can, but a lot of times by the time you get that or read it, or if it's in a video, it may be too late. So that's why I do these long-winded videos. I give you the levels in advance, not just the key technical levels, but the developments to watch for and to act on. So you have to have your own trading plan, where you want to buy the VIX, if you do, where you want to sell it. And, same thing with the stock market. All right, enough on that. Let me just, the other trade I've been focused on the most lately is natural gas. Still like it. Still looks good. We had the breakout long entry here over, this is a 60-minute chart. Remember, I've been giving you on the futures, a 60 and the 120-minute. So these targets are showing through. When I toggle over to my 60-minute chart, it's just showing the targets that were on this 120-minute chart, which we hit already the first target. But I wanted to show you the 60, just how well it's playing out. We had the breakout, hit that. These are the what I call micro or more active trader targets. Hit the first target, 2102, pulled back, or 2102, rallied up. We just hit this 2191 today, 2191 today, pull back, and at the 2102, which provides an objective long entry, as would another pullback, a little deeper pullback. Like I said, you might not want to see, depending on where you're in at this, a back test, but if it does back test, I'll highlight that, and that might prove to be an objective entry or not. The natural gas should be, if it gets much higher, if it takes out, I think if it can take out this next level, that'll kind of be the point of recognition to the bulls where they realize this thing's wanting to run, especially over that level there, T2. It should really run and start moving up more impulsively than it has been. It's just kind of stair-stepping higher right now. I mean, believe me, it's pretty semi-impulsive move, but we're kind of in the realm of what nat gas does. But there it is. There's your targets. We're at T1 on that 120-minute chart I just talked to. We're consolidating. This is just the typical reaction. I define a reaction when you're going up and you hit resistance as either you can have a reaction one of two ways, either in price or time. This is a little of both. We're going sideways pretty much for the last couple of days, consolidating around T1. And so once we pop the recent highs, it should open the door to T2. And that's it. Let me just wrap it here. I wanted to keep this one short and simple and get it out to you and just get out the fact. Again, if you're not aware, which you should be, it's a Friday, so you've got the 2 extra days of overnight risk, even as a futures trader. Keep that in mind, and we'll pick it up next week. We'll see if this thing can pop a little more. We might look to add on some short exposure on the next resistance levels. If it turns back down and today proves to be the end of the bounce off the 200s, then we'll act accordingly, and I'll try to highlight objective entries, trade ideas. Oh, one, and yesterday I was watching it the day before. I was going to share it yesterday, and it was up too big yesterday. If it pulls back, I'm going to just share it with you. Intel. Intel is at a great yesterday. And look, again, it's actually pulling back today. I've had this line here. You can see it pops up. I created that line back on March 27th, 2023. Actually created it, what's that, 8/5/2022 at 1930. Okay. Either way, it's a long-term support level. You can see I'm going to circle why it is. All these reactions, especially that last one. Came down here and big positive divergence. So two things to this. Number one, it's objective all day long. I know they're horrible earnings lately and they're laying people off. But how much of that's now been priced in? This is still, this used to be the king of the semis. And so I see it one of two ways, either a hedge to a short on the semi sector as a whole, especially the high flying NVIDIAs of the world and all those other ones, Taiwan Semi and et cetera, or even a pure play just on its own. But I do think it'll outperform. It's just the downside's minimum. This thing's pretty much washed out. Is it going to go to zero? No. I mean, if anything, who knows? Maybe private equity comes in and takes it out now and turns the company around, although they're trying to trim their own fat. We'll see. That's usually what private equity does. So I just wanted to point it out here. And where to? That's a big divergent low. If the market's going to new highs and beyond, easily back up here. And that would be a 30% pop to that, back to that 25-ish level there. And quite possibly more. If the market goes to new highs more. And we might even see that if the market rolls over. Again, they say all ships are lifted in a rising tide, meaning a bull market, most stocks go up. But this one's almost been trading inversely for the last couple of years to the stocks, semiconductor sector as a whole. Anyway, I just wanted to throw it out there, and it did pull back today. So that's why I'm bringing it up. It's down 3% and was up pretty big yesterday. And so there it is. So again, something, you don't fall in love with it, but you can buy it here at support, the stop somewhat below, tuck it away, especially if you're looking for some long exposure. All right, guys, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.